with like a private portfolio, so there's a little, you got to read between the lines with some of these things. Okay, let's get rolling, shall we? Let's see here. Sorry, 1 second. Let me just double check. Okay. All right. So I'll keep it short and sweet here because I think we went pretty, there we go. I'll share the whole screen. I think we went pretty in depth last week about like the different types of patterns and things. But let's just kind of do a quick overview here, just to level set, ground everybody. I just wanted to say, so like there was a question that was asked last week from Mal, where he's asking like, is this a wave 3? And my quick answer for that is no, because we had this little like stab down beyond the November 21st peak, or sorry, the November peak of 2021. And at least like from a long-term perspective, I think that we really have begun the corrective phase. But I think that the best way to show this is let me pull up the Bitcoin chart. So I think that this pattern overall is kind of what we're looking at. This wave 3 is a little short, so it's probably more likely to be like something kind of like this, where we have a little bit more of a at least for this leg up here, like we might have a little bit more sorry, I'm going a little faster. Let me take this out. And by the way, if I am going too fast, please let me know. All right, so just kind of like freehand drawing for this. This doesn't really look correct. This is probably a little bit more realistic here, where you have your 5 waves, within. But I still don't really think that that's our pattern that we're looking at here. There's things like this right in the middle that are weird looking waves that kind of look like B waves. And it'll all be clear in hindsight, of course. But for the most part, what I wanted to get across here is that if we did see that wave 3 top here recently, which looks, symmetrical. Wave 3s have some pretty interesting measurements where it depends on where you started, of course, and it's very subjective. But usually, and this is it's like scary how close this stuff aligns, right? Wave 3s, typically, if they're not extended, they will be 1.618 of your wave 1. If they are extended, you will see it typically stop at 2.618 or the next level here, this next gold level, this 4.236. That is a very common endpoint for an extended. Here, let me zoom in. Very common endpoint for a extended wave 3, and you can kind of see how the second that it breached this, you get a decent amount of selling, or at least like a heavy day of selling. And then after that first day that we saw like that topping here, it kind of just did this like rounded bottom sort of thing here, and then we made another top. So it was like a double top at the time. I guess the chart pattern's called like an Adam and Eve or an even Adam, whatever, where like one peak is slightly higher than the other. But you can also still pick out a 5-wave structure here too. So like it means several different things. And I guess, what my job is to try to discern what patterns are we looking at and what patterns are likely to emerge, or at least like the highest probability that we're going to be able to see. Because we're kind of talking about long-term setup trades now, as opposed to just like little short throws. So anyways, you can kind of see here that we had these little like 3 tops, and these are long-term tops. So with that being in mind, let's take a look at this overall structure. And this is the same for like, the S&P, and I'll show you guys the Dow and small caps and stuff. But I'm thinking that this is either like the top or within a couple points of the top. And I'll explain that here in a second. So if we draw this little fib to kind of get down to the details, you can see here that it's got this like extended sort of wave 3. So if we do see, or the bullish case at least, is something like this, where we see this excuse me, see this sort of like wave 3 thing, and maybe like a 10 or 15%er to bring us back down to where the breakout zone was, where that gap was. And this is actually where I closed my longs, unfortunately. But this is something that I can see as a plausible sort of, like a bullish scenario. Excuse me again. I'll stop there. Questions? Does this look weird? Am I going too fast?
That looks good.
Okay, cool. So basically what we're looking for is the end of this wave 3. So, we are kind of pushing the top here, and you guys can see that this volume is more heavy red on these specific days. And it's been kind of flagging a little bit. The days where you see decent buying is usually after the dip, and that's just a conditioning thing. But you also see here that this RSI has been, well above overbought for quite some time. This super tight range here, like I can understand if you guys are getting, burnt out about, constantly beating the drum on, like, oh, well, we might have a pullback just yet. Like, believe me, it sounds way more stupid when I type it every day. So I applaud your patience. And if you've held on for this long, guys, I think it's coming. I think it's finally actually coming this time. Just from like a wave counting perspective, I've said this before, like algorithms trade based on, wave counts, and like they're programmed by people that trade, and normal good traders and stuff, they at least have a knowledge of wave theory. And just looking at price action and stuff, like all day, like I do, you can see that, things really do trade in these 3 and 5 wave structures. And if it didn't, then none of this stuff would make sense, and like your strategy would fail pretty quickly, right? So that's kind of why it kind of like reinforces my methodology here, where, yeah, you might see these extensions up, that sort of thing. But what we're really looking for, though, are like the hallmark signs of an ending pattern. And right now, this is sort of what's emerging. Again, like for this slightly more bullish sort of pattern here. So let's just assume this is like a wave 3. This structure is a ending diagonal. I think I mentioned that in the like morning post and stuff. But this is I would say, like an expanding diagonal, which is a little rare, like megaphone pattern. It's just another type of ending pattern with different probabilities of reversal points. And it makes it very difficult for people like me to try to figure out where it's going to turn or whatnot. But for the most part, you typically have these 5 touch points, within this, within this sort of structure here. And you can make the argument that we just had like a truncated top. And I mean, we did see, again, a lot of that selling yesterday, but that's after we hit these major levels. So like the 23,000 for the Nasdaq. Here, let me pull this up. So 23,000 for the Nasdaq. The if I pull up the S&P, look at the high here, 6,300. I mean, that's right on the money. But ever since we hit that, the price action feels a little different. Like when you're watching it throughout the day. Like yesterday, you could tell that the bears were in control all day. The bulls couldn't get anything started. There's lots of decent buys to try to buy dips or whatever. It just didn't really work. Today was a little different because we had some news about Powell potentially getting fired. I think that some of these things you can make an argument is it's like testing what the reaction is going to be to certain news, because I mean you got to think that people have billions and billions of dollars in these trades, and when we have these sorts of events, people can make or lose big money. So I would say there's another potential pattern here that I think we may have completed instead of that like expanding sort of diagonal I just showed you guys. And this is just the, again, an alternative bullish count, where it's kind of like you just had your wave 5 almost, where you kind of count them like this, and then you break out down below. Now this would be considered like a small wave 4, if you kind of zoom out here, this, you can kind of make the counts here where this is like your wave 3 up kind of thing. It's a little hard to kind of see here, but it's still significant where you can see at least that like the structure is still there. And I don't know, just like it's kind of hard to explain. It's like just from a how the thing is trading sort of feeling. It just doesn't look as lively as it used to, like a couple days ago even. Then also too, once you get to the lower time scales, you can start to see some of these like the RSI backing off of the highs and stuff. But if you kind of zoom in here, once we hit these highs, like this count seems decently valid. But at the same time, again, the first one I showed you guys, you could potentially extend up here to this like 23,200 level for Nasdaq. But that's, I'd say, the most bullish. Anything really above that really is kind of, or above like the latest highs, like a blow off top, or at least potential for one. And that's even more scary because the blow off top, like you never know when it's going to stop, and all your short positions are destroyed. But after a blow off top, things go terribly, terribly wrong for the bulls. And that's when you have massive corrections. So anytime you've seen, so something like this is a normal, everyday sort of pattern in the markets from some sort of like, just ending pattern. Like the longer term cycle is wrapping up, at least from what it looks like here. And if it's not, then that's where you got to be aggressive with your buys. But weird things are happening right now, like Powell being threatened to be fired, that kind of thing. With this kind of shot across the bow yesterday, with that trial balloon, that's where I was really watching closely for it, with like the rumors and such. And the buy up today, I think, is just buyers trying to like if you look at the volume profile for the day, I really do think there's just poor volume, to say the least. Like ever since you kind of ripped up off the ground here, you get this declining volume throughout the day, and then you get a decent amount of sells going into close here. So you can kind of see that clustering of that red, and you did see that the day before too. So you see kind of down here where you had a little bit more of that sell pressure. Well, in my opinion here, this is the bears are using this as another opportunity to sell into strength, and the bulls are using it as an opportunity to exit their trapped long positions. Because as soon as we drop down like right around here, you can kind of tell that there was a lot higher volume trying to catch that knife there. So I guess long story short, because it does translate to all the other equities or equity indexes. I think you just saw like a trial balloon today. And if there's actual real news that Powell's going to get fired or whatever, which I think is highly likely, like Trump's probably going to find a way to do it. I think there's going to be longer term implications for that. I mean, in the like, for example, if you look at gold, so gold, just in that short amount of time, gold ripped up at least a full percent, like 1.2%, something like that. And that was in like 10 minutes. So that tells me that bond traders, okay, so let's look at the yield too before we start talking about all other stuff. This to me looks like the first leg of this incline. We could see something kind of like this where there's a bit of a deeper retrace, but we might not. So I'm not sure on that yet. But this looks like kind of a pretty strong, like a pretty strong wave up here. With a top, like at this bull target 1. So like this 4.575, that might be what we hit first before there is a reversal or like a back test of any of the breakout zones. So I show you guys like what the yield did yesterday. So that was where the rumors of Powell being resigning, and then there's today where there's a little bit of a pullback, but it still started the day low and then spiked up right away. So that in combination with gold and in combination with oil, because oil was right around, this support point that I think I flagged yesterday, this like 65.5. This is where we saw it kind of get off the ground. There was some news with, Israel bombing some places in Syria, that kind of thing. That whole area is just a mess. It's a quagmire. It has been for forever. It's only a matter of time before something else, flies off the rails. And I'm trying not to be, make like political statements here. It's all relevant to what's driving markets. So try not to, think I'm trying to be political or anything. It's just things are a little nuts, right now, and it's hard to trade without having at least an eye on it. So I guess I show you guys all these things because there is very, very limited upside for equities, and at least in my opinion, there is. Right now we're at like peak bullishness, euphoria. Note you can't lose if you buy any dip, that kind of thing. But that's really where you get to the point where it's like you got to keep an eye on the bigger picture. So the first thing, sorry, one second. Let me pull up the other chart. I got something here. At least I did. Maybe you should get organized, Gaines. How about that? Maybe you should stop referring to yourself in a third person. Sorry. Okay, sorry, I can't find it. I screwed that one up. But let me. Crap. Okay, sorry. Back on track. I'll just leave this one. So there's, I guess the Bitcoin chart, I would say, is the easiest one to kind of understand from like a topping perspective. So now that we kind of talked about, the different equities and like the patterns and charts and stuff like that, like the Dow really hasn't made a new high, but it probably will. They'll probably just play catch up. Like small caps got hammered over the last couple of days. But I still think that gold has a lot more higher upside to go. Same thing with oil. Gas looks good, but it looks maybe a little extended for this first wave up. But Bitcoin. So Bitcoin, like I said, with this, these sort of wave counts, Bitcoin here, it hit this 1.382 level, which is usually, I would say, like the top level for any sort of irregular B wave pattern. So this pattern in white that you see here, this is where I'm starting to kind of get that vibe that it's topped. And also look at the massive volume that happened here. So these are, in my opinion, these are just very, very skilled patient traders that waited all this time and then to sell it down. And if it does extend higher, selling, let's say you bought Bitcoin down here and accumulated, now you've made yourself a nice gain there. So I guess with that being said, this irregular flat, this is kind of like one of those telltale signs where, yes, we actually might get to see this because we're at peak euphoria, peak RSI, but big volume at the top, or at least last top, local top. And if you look at something like, gold, this is the short-term sort of view here, just in case. I don't really know if this is going to be the right one, but it might. It should at least like trace out this sort of triangle pattern. So I do expect gold to hit right around like 34.13 for a 50% sort of move up here. At least to kind of come back up to where we had some other peaks. So hopefully that kind of makes sense as to like why at least some of these different charts. Sorry, I feel like I'm a little all over the place today. I apologize. But like with like the 6,300 with the S&P and oh crap. Sorry, I'm sorry. Hold on one second. Here we go. So with these major levels being hit, kind of why I wanted to flip around the charts and kind of show you guys what's going on. This has been a little bit tough to pin down over the last couple of months. Here we go, back on track. But still, this is kind of like what you see around this, where you see a lot of volatility just in a tight range as sellers sell into strength, and then buyers try to exit trap longs, that kind of thing. And then they finally realize, oh, we might actually sell off here. But you're starting to see the volume kind of increase a little bit. And for all the different other charts, this is kind of looking like a bull flag, but I still expect these guys to hit, or the Dow to hit like 4,500. This kind of looks like a wave 4. So yeah, we might get a little bit higher, but overall, like equities hit their, pretty loud sell targets for a lot of like longer term sort of traders. But that also means that the other things that have been depressed lately, like, the yield have been consolidating for months. Oil shot up once, and then now it's been sitting on the floor for a while. Gold has been consolidating. All the other like tradable tickers that we have here, it's just nothing's really doing much, and it's been frustrating. I'm with you guys. Plus, also holding shorts, it sucks. But I do think that things can't stay this way for forever, and there's going to be some sort of somebody's going to say something stupid, or somebody's going to do something stupid, and it's going to be like, I think there's just people waiting for an excuse to sell down the market. So that's kind of what I think, just because these guys got to be running out of inventory. They've been distributing for 2 months at the top. They had no time to accumulate at the bottom. And it's just been wacky ever since April. So I think people are trying to look for, they're like cautiously optimistic by staying long, but we've been fooled before. So it's like, I'll believe it when I see it, but that's what the signs are pointing to. So I hate to be bearish. It's just not that fun, but anyways, hopefully it makes sense. This is kind of why, like, the overview, it's like, okay, we hit some good targets. We saw some reactions that we would expect. RSIs are backing off from peaks. And then some of the other tickers like gold and silver and oil are starting to move again. So that's signaling a longer term sort of market shift. I'll stop there before I go into like the VIX and some of the other questions and stuff. Any observations, comments, concerns? No complaints. Can't do complaints today. Mr. Nelson handles the complaints. He's got the inbox for it. Okay. All right. All right. That was your one shot for questions. That's it. I'm kidding. What do I want to show you guys? Silver's got some room to run here. It kind of looks like a wave 4 low. Don, you had mentioned, or I sent an article about that before. It kind of looks like this may be a very short term sort of dip here. So again, like if gold runs, silver's going to run. Like we've been talking about before in the channel, even though gold is, I was looking at this the other night, and I wanted to make sure that I talked this through. This is a alternate pattern for gold, by the way, that we could see just like a normal wave 4. The article that you shared, Don, said that like gold had peaked. Well, I'm not so sure it has. I think that this is a pretty clear sort of like wave 4, and coming up from the bottom here, you can make a pretty good case for an extension up. I think maybe like 3,600. I think I had that on the chart a while back as like a major like fib level extension point. And typically like wave 5s extend with commodities. So I just think that there's not really a good place to park your money if you can't park it in bonds reliably. And especially if the Fed chair gets replaced with with somebody who's just going to lower rates right away and forget being independent. That's that credibility that gets eroded, and you have a problem with interest rates then. So we might get a short term relief, so those guys can refinance a bunch of U.S. debt, but that's still going to flood the market with supply. So yes, Don, you got a question?
Hold on. Yeah, not a question, but I mean, it looks like a pennant pattern to me.
Yeah.
But, the whole thing is what the dollar's going to do.
Yeah, that's right.
And the interest rates. I mean, it's very rare for the metals to go up if interest rates and the dollar are going up.
Yeah.
It could be an anomaly, but it's rare.
I agree. And I think it's, part of it, I think the, like sort of the canary in the coal mine, and, I'm happy to chat about this because I want to collect more opinions on this, because I don't know everything. Far from. I just play one on TV, like an expert, but I'm not kidding. Had so many puns today. So I kind of think that, like the dollar may have like this real short dip, like 92 is not going to be the end of the world, or like 91.90 or something like that. But a realistic sort of just because this really does kind of look like one of these patterns here where you get these long-term sort of swings, and this is a very, very long term. We're talking like 10 years here. But like I think the canary in the coal mine again is related to interest rates and inflation. So you're right with metals, like, if the dollar keeps going down, that kind of thing, metals, they shouldn't really align, but we're seeing that alignment right now, which is weird. So it's like, it's diverging, but I think part of that is just because there's a shift in asset ownership. Whereas before everybody piled into bonds when there was this, first whiff of weakness. But then now, if we're starting to get some speculation that we may see a new Fed chair with, that might lower rates, then, it might just have an impact. Like if I'm a foreign holder of US debt, I'm probably going to want to dump that debt because there's going to be more inflation and my investment's going to be worth less, or at least the principal amount, but the coupon is going to be less too than what it should be. So it's like maybe, all the inverse relationship stuff trips me up sometimes when I'm talking about it. But I mean, you kind of see what I'm getting at, where it's like there's the interest rate fluctuations due to inflation, but if it's manufactured and they're trying to do something so they can benefit short term, long term it suffers. So maybe that's what hits the dollar hard. And then people, if they don't go to bonds, they'll go to metals because they see that as metals are like crypto because they see it as another avenue for protection. Now I could be totally full of crap. We'll only know that if and when this actually does happen. But that's at least what I'm speculating right now, is that it's kind of like the tables have turned because the rates have been going down for like 40 years, and then all of a sudden now they're starting to go back up off the floor, and we haven't really had a lot of like good back testing or model comparison to those normal correlations that we've had in the past. And that's what I've really been kind of keeping an eye on. And, some of these guys, or some of you guys have seen this chart. This is, like how the yield correlates with its normal relationships. And this is something I check every day, like every morning. And I mean, it looks like a chart crime to the unaided eye here. And it is, but it does serve a purpose. It's like when all these things are moving together with the normal relationships, that to me says that the market is healthy. But when they start to diverge or they're not really correlating, that's when you start to see some weird stuff happening. So I think that's at least my thoughts. I'm happy to entertain other suggestions or potential scenarios with that.
Well, yeah, I think it's the reason why the dollar and the bonds are going where they're going is different than normal.
Yeah. Not a lot of historical.
Yeah, it's not that.
There.
I mean, the Fed's not tightening, so that's not the reason for it.
Yeah, weird stuff. Weird stuff.
So
yeah.
So it very well could be an anomaly, and we could see the metals go up while the dollar is going up, or while the bonds are going higher in rates.
Mm-hmm. It could also be like a short-term thing too. Like if you remember last April when we had that, it was until like mid-July, right, where we had that divergence where gold was positively correlated with yields.
Mm-hmm.
Part of that was with a lot of the Chinese bond buying, or the bond dumping and the gold buying. They're also trying to create their own reserve currency, and I mean it's hard to do, obviously, with the dollar being super dominant around the world, but it's not impossible. So I think it's just a slow, longer term shift where, I'm kind of thinking that the U.S. is going to have some trouble with, people, like just having too much supply in bonds. But how that impacts the dollar, I think remains to be seen. But it just might be a short term thing. Like we might just see like a quick stab down to like 95 or something, and then bounces back up, and then the floor is in, and then it takes off. We don't know yet. All right. So let's talk about VIX. Yeah, the big thing has been burning here. That was kind of a fun pump this morning. I wouldn't be too concerned about like these moving averages, overlapping each other. it's volatility. So it's really just the derivative of, sentiment and options contract pricing. So to me, it doesn't really apply. At least like, like for example, in like 3x leverage charts, they still have the same sort of chart structure. It's just like more extended higher and lower than the underlying ticker. But, you can get some weird math there with your moving averages. With the VIX though, this is what we had outlined yet. Let me see here. Sorry, I got another chart. So this one, here we go. I showed this the other day where I tried to put the lines where, the vertical lines at least, where you saw a low with RSI, or the strength with that, and then you saw, I guess, the corresponding explosion of volatility after that. And so you can kind of see that it kind of dances around the lows for a while, and this is usually when you see that topping process, right? So it's that 2-month period or month and a half, or maybe even 3 months, where it's just everything is super slow, and summer typically sucks. It's call it the doldrums of summer. It sounds like a real bad romance novel, but don't laugh at your own jokes. That's rule number 1. But still, you guys can kind of see what I'm talking about with this, where anytime the RSI gets really low for the VIX, there's always, an explosion of volatility. And all the books that you read about Bollinger Bands and just volatility trading in general, they always seem to stress the cyclical nature of volatility, where it's common with the psychology behind trading, where it's, like right now, nothing, you can't lose if you just go long. And, chat rooms are full of, bears getting their butts whooped and, calling for, the end of the world when there's only been like 0.5% pullback kind of thing. Like, it's just, bears fishing for a little bit of silver lining, when they've been getting beat up for so long. Case in point, right? I'll raise my hand. And probably some of you guys too, which I do feel bad about, by the way. So don't think that it doesn't weigh on me. It's like you can't control it, right? So you just have to hedge and be patient and wait. And this has been a pretty bad one, I'd say, from like a surprise perspective from a rally. But I also think too that this is from a charting perspective. It kind of feels like a 2008 sort of thing, where like the market's just been grinding up higher and higher in the face of like bad news, bad data. Like housing data it's looking a little shaky. Like auto sales are down. There's just a lot of weird kind of stuff going on and some uncertainty. And the market has been unusually calm for all the things that have been thrown at it since April, really. And the fact that we're talking about all-time highs and several different all-time highs, like fastest rally in 50 years, like if you can say that you saw it coming, I'd probably call you a liar. I mean in a nice way. But the reality is that like you never know when it's going to stop, and a lot of smart people have been fooled by this rally, and it's like there's only so much you can do about it. But what you can do is you can read the tea leaves, and VIX is one of those tea leaves that I think is a really good way for us to kind of figure out like where things might be going. So VIX is really just that measure, and thank you guys for posting about this yesterday. I think thought it was a really good exercise. VIX is really just a measure of like SPX over the next 30 days and the implications of like what the implied volatility is doing. So it's really just that, like it's called the fear index, but it's really just people buying puts or less calls, and that ratio and the speed of that ratio. So when we first kicked off the call, we're talking about like VOMA and like all those like deep options, sort of metrics. You don't really need to understand all that stuff to just understand that, volatility or the absence of volatility creates volatility. So it's like, if you guys, if you guys ever like had a class in physics or something like that, it's like entropy, like a vacuum creates energy kind of thing, and in the absence of like buying or selling or any volatility, you get people that take up the contrarian trade, or try to pick up a bunch of puts and stuff, thinking that we're going to have a sell-off, and then we could be wrong, like back in early July, or we had a little bite in June, but for the most part it's been pretty brutal holding shorts here for the last, I'd say probably 2 months. And that's just, again, like part of the topping process. But, the UVIX trade, I do have confidence in it because, like today, I think you said you took some profits on something like that, but, like that, it jumped 16% in like a day. I mean, that's awesome, right? And even the UVIX didn't quite translate to that. The fact that it went up that much today, but then, ultimately, kind of got crushed back down. You still have that momentum there. So now people are going to start to look to exit or take some profits or at least take some money off the table. And that kind of gets that ball rolling, where, yes, you might have gamma pinning prices where they're at. That's just dealer risk exposure. But now you're starting to get like people with money in the market to, you start to see some outflows and these hedge funds and things that have all these billions of dollars, they're very smart. They have all these models and metrics and whatever, and you tell when liquidity exiting the system. So with that being said, we're also coming up on a very seasonally challenging time for the markets, and it's a non-election year. So typically, 3 years out of the 4-year cycle, all 3 years not in the election cycle are typically bad for markets, like September and October, and actually like August too. And then on top of that, there was also the the Bank of Japan changed their rates again. So that's I'm kind of, it's interesting to know, or it's interesting to think like why there hasn't really been much of a reaction. But there could be something brewing below the surface that, maybe in a week's time we'll be talking about something completely different. But anyways, long story short, with the VIX today is that it's starting to pick up a little bit with strength, and even though just a rumor jumped the VIX 15-16% today, that's still good enough to make a lot of money. So if you can't really trade the chart patterns and stuff, at least we can start to trade some of the other fringe things like again, like VIX, gold, oil, and try to focus less on more of the equities. All right, any other questions about VIX? Andy, full of crap. You talk too much. Your jokes suck. All right. So let's talk quick about. Sorry, I think I glossed over the Bitcoin chart when I was talking about the irregular. Just real quick. Bitcoin does seem to have topped. I sent the chart about it yesterday or last night, but you can see this huge volume spike. That to me is a pretty good indicator that somebody with deep pockets is selling, but likely they're trying to sell into strength. It's a logical part, or it's a logical spot to sell. And if I pull up something like NVIDIA, crap. Hold on. Here we go. If I pull up NVIDIA, you can kind of see here that this is a long-term pattern, definitely a topping pattern. It's this sort of like megaphone thing. I don't like megaphones. They're not really like super reliable, and they're never really obvious until you're almost at the end. But now it's like, now you're starting to see some people that are positioning short with options. I think I mentioned that this morning, where there was some put gamma and stuff that was accumulating on the books from NVIDIA. Tesla, I think is, sorry, I was screwed up. Tesla, I think, is making a B-wave top short term here. We had kind of that big spike up, back in December, right? And then we had all the fallout with the president stuff, and I kind of feel like it's made a pretty solid like ABC up here, and we may have just seen the first. Let me just draw this here for you guys. Hopefully it makes sense. So if you focus on this short-term view, so what I look for is if we have like a 5-wave down sort of thing, and we did. So we had this like, back a while here. And usually, there's to start off this 3-leg pattern here. If you have a 5-3-5, it's called a zigzag. So what you want to look for on the downside here, even though this is labeled ABC, what we're actually looking for is something like this, where we just had a wave 2 top, and then you start to see this like wave 3 that takes over, but you also have this smaller, like wave 2 of 3 kind of thing. So I would actually expect this to be sharp. If we do see some selling, which big if, right? But it's kind of sitting pretty close to this 50%. And I think a lot of traders have this bullish sort of triangle here. But to be fair, you can see these triangles develop at like B waves, or at least like longer term B waves. But you can also, let's just say they happen at like B wave tops or wave 4s. And this doesn't really look like a wave 4 to me. It's retraced too far. So it just kind of looks like a B wave consolidation for now. And this is really what I'm looking for with Tesla. And I think that'd be reasonable, considering, he's trying to start his own political party, and you're going up against a guy who's got a, pretty active keyboard. So, yeah, anyways, I just think, you're kind of playing with fire with that. It's like, don't poke the bear. Well, don't poke you know what I mean? The bear is dead. All right. So let's do MSTR. So this one's been kind of weird. This one is just directly related to what you call the Bitcoin. So with this kind of being, let me draw this quick. With this one, you might get an extension up to like 477 or something, but that's really only if Bitcoin extends. I don't think that that's really going to happen, but I've been wrong a lot, so I've been trying not to be wrong a lot. So I guess if you're in the MSTU trade, or sorry, SMST trade, try to look for these sort of like ABC patterns in here, because I think the larger structures in ABC that we had here, even though this is a impulsive sort of wave, it'll all become clear in hindsight, of course, but that doesn't help us today. Usually, like these sort of corrective moves, it starts out that way, but it can easily turn into like a 5-wave sort of thing. So even if we had this sort of like a bounce here to make like an irregular sort of wave 4 like we saw in Bitcoin, because it's like right there. But now that's crossed that threshold, that triggers algorithms to sell or buy or whatever. I'll be looking at the option structure too of MicroStrategy to kind of get a better handle on it. But I think if you do see it get up to this like 475 level, that's like the end of a wave 5, and it shouldn't get much worse than that. But you should have already been hedged at this point with MSTU, and you could have actually made some decent money scalping. If I had extra money in the portfolio and it wasn't in flames, I would have definitely hedged with MSTU. So just like a FYI for you, there hasn't been a lot of trades just because I'm kind of trapped at the moment. But if I did have extra cash, this is definitely one that I would have hedged. All right, that's kind of it. Oh man, look at the quantums. We got some stocks that are kind of rolling off the books here with options. I'm gonna try to hold as much as possible because again I'm thinking that there's something coming up here from like a market perspective, from like a sell. But what I'm really looking for, let's say for example, because I don't really have, or I have QUBT left and CCL, but CCL is looking. This kind of looks like a wave 4 right here. So what I'm thinking we might need to do is to roll the options forward. If it does get up to something like 32, it'll cost a decent amount to do that, but it'll still be good to it'll still be good to kind of reset that higher up. And that's just in case like we don't actually see any selling. If we do see some selling and you start to see something like this, then the VIX is going to start to shoot up. And that's where I would pick probably like a lower strike, like 26 or something, and then, sell some calls out like 3 weeks or something like that. But right now, the sold calls are still a little bit high. They still have some time left, but what we're kind of looking for is like a little bit of a jump in the VIX and a little bit of a pullback, so we can buy back that previous call and then sell another call at a lower strike for more money while the VIX is higher. And then if the VIX kind of, if we do see like a short dip, then the VIX will decline, and the value of that option will decline as well. So even if CCL has a bounce, for example, the decline in the VIX might be enough to offset that incline in price. So it might be like a wash there, but that's what you want to try to do, is like sell the calls while the VIX is high. And if there's more of a decline after that, you might be able to choose the same strike and resell it. So, but we will have that opportunity in the future. It's been unusually bullish, as you guys know. And the issue with that is, you don't want to be selling calls into strength. You want to be selling puts into strength. But hindsight's 2020, of course, to say that a lot lately. But from all these sort of stocks, like stocks that go up are good, right? That you own. So I really wouldn't like stress too much about like if you have to spend money to buy back sold calls, because you still have the underlying asset that's appreciated. So even though you're not making as much money with just holding the stock by itself, the real trick to make the money is when the stock starts to go back down, and then you keep selling the calls at lower strikes and keep getting a ton of premium as the VIX increases in value. And that's really where you'll start to really leverage that strategy. So we should have been selling a little bit more puts. Right now, I don't think I would sell any more puts or really sell any calls. I think I would just manage existing positions, just because we don't know if we're going to have a pullback or whatnot coming up here. But I do think that some of these like quantum stocks, for example, I think they're getting this kind of does look like a wave forward to me. So I might same thing with like QUBT. These guys are forming some triangles. So kind of like I mentioned before, you could easily draw some 5 waves sort of things here, even though it looks like a triangle. So just flagging that here, because I know a lot of people have sold some calls for QUBT, and that's why I also wanted to post today that the position was open or up 50% today. So yeah, hopefully that was like if it does head up to this this wave 5 sort of location, if you closed out the call, then you can ride up the rest, and then once it gets to the top, you can either sell your shares and buy them back lower, or you can sell more calls and try to make money that way. So, all right, that is pretty much the spiel today. Oh, we didn't talk about options expiry. Okay, so Mr. Nelson, you had a question about options expiration dates for some ETFs, right?
Yes.
For next week.
Yeah. Yeah.
Was it anything in specific you wanted to ask?
Not really specific. I was just wondering, after the options expiry, if you see it seems like that's when, according to Robert Ballin, that's when the decline's going to happen, right then on this Friday. I was wondering if you could speak to that.
Yeah. So what he's talking about is a dip in the liquidity models, and like dip in bank reserves and all those other like large dollar things that impact markets, like behind the scenes. So like reverse repo, like all those buzzwords and stuff you hear in these articles. The chart that he has is very specific to really it's just money in, money out. So like the line chart I showed here, like the chart crime, that's actually where I got it from. I got it from Robert. He was making fun of somebody who called his charts chart crime, but those in relation to the liquidity charts. And that was really specific to, like when you take a lot of liquidity out of the system, and like there's not a lot, like people aren't really going to be buying in size at these levels. So really, I think what's happening right now, and he mentioned, and I agree, like there's been a lot of put volume that's been showing up on the books, and the dealers have to hedge that with taking long trades. So what's happening right now is the dealers are trying to protect themselves against decent loss, because they're trying to make the market. So they have to buy calls or go long futures in order to offset those offset the premium for like a lot of these puts that people bought. So I think that's actually part of why we've been stagnating here for a while, not just distribution with larger institutions, but it's also been dealers that are trying to let a lot of these put options that people bought expire. So I think that's what you'll start to see here in the future more and more, as more people try to trade options, and the options, just the huge gamma icebergs that you see people talk about, they are like magnets, because dealers have to hedge, and dealers are the ones that have the most concentrated exposure. So I guess the long story short with that is you have a lot of these people that are buying puts right now, but they're the smart ones. The dealer still has to hedge that. So like, again, when the VIX shot up like crazy today, all the dealers have to buy futures. So that's why you see a lot of those like V-shaped recoveries if they have a lot of exposure. So if I pull up something like the VIX, and kind of like how we were talking about these different low points, the lower and lower the VIX drifts, the more probability there is for a sell-off, just because people aren't buying puts and the dealers don't have to go long. So the dealers don't get trapped at the top. So it's like we're at a pretty significant top right now, and or at least it looks like we're at a significant top, and we're not really getting below this this like $15 or $16 level here for the VIX. Certainly not like back in December here when we had next to nothing and it was 12 or 13. But now I think it's been elevated since April. So people have let's say longer term put options that they took out that expire in like November or December. That's the type of stuff where dealers are trying to keep it pinned so that the theta burn, like they make money off that. So if they own the opposing trade, they don't mind so much about the theta burn because it kind of cancels itself out. Like it's just, I don't want to beat to death, but hopefully it makes sense. Kind of why you might see something pinned like that, or at least like why you might see volatility after you get a lot of options that expire or roll off the books. Does that make sense, or did I totally screw that up?
Yeah. No, that's helpful. Thank you.
Okay, cool. Any other questions, comments, concerns? Now I can open it up for concerns and problems. Anybody royally screwed that needs to be bailed out? I can offer a digital hug for you, more crappy jokes. Thank you guys for the patience. I know it's really, man, this has been a tough one. Quarter two in the beginning of quarter three here. I think, I don't think that fall is going to be very kind to the market. I think that, all the stuff that's been going on, it's finally going to catch up, or, there's going to be some sort of systemic instability that manifests itself through, blow up in liquidity or something, or, whatever. But I don't know. I mean, like, you got to put it in historical context. We had more than 20+% gains year after year. And, you read a lot of these articles like, once this happens, you'll be surprised at what happens next. Well, you're not really surprised. It's like to have 3 years in a row that have 20% gains every year I don't think that's ever happened. So it's like, I think the only other comparison was 2 years that had 20+% gains, and then they had it was like 6% the year after or something like that. But that was with a big correction. So we've definitely retraced pretty much the entire thing, or not pretty much. We have retraced the whole thing. Market's up for the year. I don't think it'll end positive for the year. I think that longer term strategically here, a lot of these charts are looking like they're in these irregular sort of patterns, and we're looking for wave fives, or sorry, we're looking for 5 waves down now. But we won't really know what the catalyst is going to be until, it's a little bit farther down the line here. But if you guys are in cash and haven't shorted anything yet, 1, congratulations. 2, you have, tip of the cap and a salute to you. But if you're really scared about going short, maybe what you want to do is, like, right now would be a good place to be in cash, and then wait for, some big support, like on an actual dip, like a couple percent. And then that might be like your wave 1 low or your A wave low for the next, it's sort of like you're waiting for them to buy it up and waiting for that second wave of the cycle to kind of show itself. Instead of like making a new high, you make, a marginal, retracement, and then it gets sold down right away. Then you can pile into the shorts with higher probability of success there. And if you're already short, I would say it's probably a little bit too late to sell calls on like your 3x ETFs if you're holding them. If you do have a little bit of capital laying around, UVIX might be nice at these levels, especially after it got, the volatility got crushed today. Yeah. And Susan, sorry, you got your hand raised.
Yeah. Hey, Gaines. You talked a little bit about the dealer side and theta decay, and as you know, I'm more of a hedging a long portfolio than kind of trading short term. But when I kind of delved into the Greeks a little bit, and I just need you to comment on this. My expectations are that as theta decay is going to kind of really start to rev up, by about weeks 3 out, or 3 weeks to expiration, number 1, and number 2, and this goes to how I'm going to roll these things, because I expect to lose in the short term, but I really just want to be set up in case there's, a movement of even 5 to 10%, 15%. And so theta decay I look at as being, maybe 3 weeks out, maybe 4 weeks out, thinking about rolling, maybe even as far as 6 weeks out. And then in terms of Vega spikes, which is a lot of where these kind of tail risk hedges lie, that Vega kick is going to come in somewhere in the first 30 to 45 days. Does that seem right to you? I'm less yes. concerned about gamma or delta and gamma. I'm not really trying to make money in the short term on these hedges. I'm really just trying to protect maybe for more of a big event, since there's been such a market run up. And if the market keeps running, it's just a drag on the portfolio. I don't really care. But what I don't want to be is caught like I was in 2022. Sure.
Yeah. So that's a very good question. The Vega spikes that you mentioned. So that's really just a feature of the short-term dated puts. They're just a lot more sensitive to those rates of change. So like if you get a implied volatility change, it's going to impact the other Greeks in a way where it's kind of like a bell curve almost, where it's like you're kind of coming right down the backside, where anything crazy that happens today doesn't really matter much to an option that's, let's say, 120 days out, just because it has enough time for that, to kind of settle down and, be less volatile. So you'll make less money for a downward hedge if you have like a really far out option. Like leaps are nice for calls, especially on like let's say something that's like an expensive stock that you don't want to buy 100 shares of, something like that. But if it comes to like indexes and things, or like a larger portfolio, and you don't want to trade futures, then yeah, certainly I would say like a calendar sort of spread would work really well for that, where you have your longer dated puts, but you also like sell a put, let's say you got like a 10-point spread or something. But you can always set like a GTC order to close at like break even for your hedge. Because then if the market actually does go back down, and then, you can actually profit from your put positions, like it really wouldn't be that much of a drag on the portfolio if you sold a put like a spread. But if you bought back that hedge once it actually starts to decline, especially like, when the VIX is still kind of low like it is now, you could still make out pretty good with that sort of position, at least if it's like a calendar spread. So you could make money short term off that position, but then hold those longer term puts for that tail risk. And I think it's actually a pretty good strategy, especially if you don't want to, like let's say sell out and have a whole bunch of capital gains tax, something like that. That's always something that's in the back of people's minds. There are a multitude of reasons. Hopefully I answered that.
So
I did.
to clarify, you'd set up a calendar spread where buying long, maybe a far dated put, and then the short side, you're just writing much more short term, 2 to 3 weeks kind of thing.
Yeah. And like you could do, what I used to do was a calendar spread with, especially with like puts. I would do a 2 week, I would sell a 2 week put, and I would always set like a buy order at break even or something if there was just a hint of any sort of selling. But in a market like this, it just goes up and up and up, and there's only like a 0.5% pullback. That could be a pretty lucrative strategy. But you do want to kind of pick that sweet spot where you don't want the longer term puts out so far where you're not going to make a lot of money if it does dip even 2, 3, 4%, because then you won't really hedge much. But what you could also do to manage tail risk is you could buy a couple of puts. So like, okay, let me explain this in a way for like just simple futures kind of trading and hedging. So right now in my fund money account, okay, I have one short Nasdaq contract, but that's a back month contract. So that would be like the put that you buy. And then the front month contract, that's where I do all my like long hedging and stuff. So that's what I actually trade during the day with because it has more liquidity. So you're going to have a lot more success with a calendar spread if you do something like that, where, if you continue to sell these puts or whatever as the market grinds away and tops, I think it's kind of obvious now that, major tops, or even minor tops, they have 2 or 3 weeks, maybe a month worth of consolidation at those tops. So there's plenty of time to adjust those positions. And in those consolidation ranges, like that's just great to make a bunch of money on theta decay with a calendar spread. But on the flip side, what else you could do is you could buy a bunch of out of the money puts. But again, you want to make sure you're being careful about like the longer term thing or like the longer term date. So to kind of go back to that futures example, like the being short the back month contract, like that one expires in December. So I have plenty of time yet for, and I just took that out a couple days ago. So it's like I have plenty of time to make money off of that one. But the key is I'm just going to hold it. And especially with options, like the longer, like the closer that time period gets to when your when your option is going to expire, yes, of course it goes up and the delta goes up and everything like that. But if you buy it like out of the money, it's super cheap, especially when the VIX is low. And if you buy something where it's like, let's say 20 points away from, the high where it is right now, it's still going to be super cheap. So like if you're looking at something like QQQ, where it's, let's say, today it's at, 557. I bet you if you're looking at a, 540 put, something like that, out in September, it's probably pennies on the dollar. And that might be a good way too. So like if you don't want to actively manage these calendar spreads, you could just buy longer dated puts, and they're kind of like lottery tickets, but if you do have a big decline and like things kind of get swept off their feet, like they did in April and like in 2022, then those puts are going to they're going to just print money. Like another example I'll give you is, so this morning, right at open and, once things started to get a little crazy with equity prices, I quick bought a bunch of calls that were out of the money with GLD. So I went essentially long gold with like 20 options or something like that in the fund money account. And at what point it was up like $1,500 today. And now, now it's lost money, of course, because everything got crushed. But still, like I bought that enough for, enough like with enough time here where there should be some sort of appreciation in price, and you should be able to make a decent amount of money off of a relatively small investment. So, I mean, I think it was like $900 or something for all those puts. And, the fact that it almost doubled in like 10 minutes, it was like, damn, I should have took profits. But So hopefully that makes sense, and I didn't like over explain it. I just sometimes you ask great questions, and for the people that watch this after, like tonight or tomorrow morning or whatever, some of them might have like different setups or different ways they want to play it. So that's why I try to explain it a little bit more than I probably should. So
No, that's helpful. Thank you.
okay, cool. Any other questions, comments, concerns? All right. Well, I guess that should do for the day. Let me stop the recording here.